This is Barry Zalma speaking today about Zalma's insurance fraud letter for December 1, 2021. This video will be a truncated version of the newsletter, which runs 22 pages and is available free as a PDF at zalma.com by linking and clicking on the link to the fraud letter. The first article is about an admitted crop insurance fraud perpetrator who tried to limit the restitution the court ordered he pay. This was a crooked farmer who has to go to jail and pay $2.5 million in restitution. Defendant Ronnie Jolly pleaded guilty to crop insurance fraud, money laundering, and conspiring to defraud the United States and to commit mail or wire fraud. The government sought restitution of monies paid by the crop insurance program, and Jolly moved to avoid or limit the orders of restitution. In a case called United States of America versus Ronnie Jolly that was decided by the United States District Court of the Eastern District of Connecticut on November 1, 2021, the court dealt with the restitution order after finding the following facts. In his plea agreement, Jolly agreed that he owned and rented certain farmland. He agreed that from 2010 to early 2016, he made material misrepresentations on paperwork regarding the federal crop insurance policies that covered his crops, and that he also procured federal crop insurance policies in the names of other people. He agreed he did it all to obtain money from the federal government to which he was not entitled. He also agreed that from 2014 to 2016, he made material misrepresentations to private crop insurance companies to obtain money to which he was not entitled. After a sentencing hearing conducted on August 13, 2021, the court entered judgment sentencing Jolly to a prison term of 36 months. Prior to the sentencing hearing, the government filed a motion seeking restitution of $2,955,163. The government identified two victims of Jolly's fraudulent conduct and asked the court to order restitution in the amount of $2,365,214 payable to the United States Department of Agriculture Risk Management Agency and $589,949 payable to Sompo International, the insurer. As to the restitution requests for the government, the amount requested represents the indemnity payments received by Jolly on the federal crop insurance policies at issue, less any premiums paid on the policies that were held in the name of actual farmers. Now, this case goes on in some detail to explain the attempts to avoid paying the restitution, none of which really were useful to Mr. Jolly, but did slow down the process and make it more difficult for the government to get the restitution paid. Insurance criminals, in the opinion of Zalma's insurance fraud letter, have no shame. After admitting the extensive nature of his fraud, Jolly had the unmitigated gall to try to limit or eliminate the restitution ordered. He succeeded in limiting what was to be paid to the private insurer to only indemnify payments and failed on his obligation to repay the crop insurance program he admittedly defrauded. The government should take all of Jolly's assets up to the amount he stole, and he should be required to spend all of the time ordered in the Gray Bar Hotel, the federal prison to which he must go. And when he gets out, any money not paid in restitution should be collected from any earnings Mr. Jolly seems to be able to acquire. The next article dealt with a Pyrrhic victory, where a fraud perpetrator's partial win made conviction for insurance fraud easier for the government. Since insurance fraud is a felony, it turns out that prosecutors who also add on extra misdemeanor charges were simply wasteful. Following a preliminary hearing, Sanjoy Banerjee, a physician, was charged with 2 counts of presenting a false or fraudulent health care claim to an insurer, a form of insurance fraud, and 3 counts of perjury. The Superior Court denied Banerjee's motion to dismiss the information as unsupported by reasonable or probable cause and sought a writ of prohibition to eliminate the charges in a case called Sanjoy Banerjee versus the Superior Court of Riverside County. The California Court of Appeals dealt with the appeal on the order of the trial court and advised in its introduction that Banerjee petitioned for a writ of prohibition, directing the Superior Court to vacate its order denying the Penal Code Section 995 motion and to issue an order setting aside the information. The people claimed the evidence supports a strong suspicion that Banerjee committed 2 counts of insurance fraud and 3 counts of perjury. Between 2014 and 2016, Banerjee billed a workers' compensation insurer for services he rendered to patients through his professional corporation and through 2 other legal entities he owned and controlled. The insurance fraud charges are based on Banerjee's 2014 to 2016 billings to the insurer through the 2 other entities. The perjury charges were based on 3 instances in which Banerjee signed doctor's reports certifying under penalty of perjury that he had not violated the California state statutes. Banerjee is also charged with violating Penal Code Section 550, Subdivision A6, insurance fraud. The statute makes it a crime to knowingly make or cause to be made any false or fraudulent claim for payment of a health care benefit. The elements of the crime are 1. The knowing presentation of a false claim for payment of a health care benefit. 2. With the intent to defraud the recipient. Insurance fraud is a specific intent crime. The defendant must specifically intend to defraud a person with a false or fraudulent claim. The crime is complete upon the presentation of the claim, regardless of whether anyone is defrauded by or anything of value is taken or received in consideration of the claim. A physician who refers to or seeks consultation from an organization in which the physician has a financial interest must disclose that interest to the patient in writing at the time of the referral. Further proceedings were ordered by the court after deleting the perjury charges which seemed impossible to prove. However, by getting rid of the perjury charges, Mr. Banerjee and his counsel made the trial of the insurance fraud case much simpler. Since the crime of insurance fraud is a simple, direct crime to prove, if a fraudulent bill is sent to an insurance company, the crime is proved, since the evidence showed that by using the two additional entities, Banerjee was able to bill $9,000 more than if he billed directly, can cause a jury to conclude he issued the bills with the intent to defraud the insurer. The Court of Appeal, by eliminating the perjury charges, made the case simple, clean, and direct instead of complicating the trial with difficult to prove and less than clear statutes concerning perjury. Banerjee succeeded partially, and in so doing, made it easier for the state to convict him of insurance fraud. Zalma's insurance fraud letter also discusses how Claim School Incorporated provides insurance education facilities for anyone in the insurance business on almost any appropriate issue dealing with property and casualty insurance fraud and property and casualty insurance claims. The courses are available for license by any insurer, and they can simply contact me at Zalma at zalma.com for further information. This issue of the fraud letter also reports on the fact that the California Department of Insurance issued a cease and desist order to protect California consumers from illegal extended car warranty sales, providing good news for all of us who get robocalls selling such warranties. In addition, the issue reports of insurance fraud from the Coalition Against Insurance Fraud, a listing of health insurance fraud convictions obtained by the United States Department of Justice, including, in addition to criminal convictions, orders providing that the fraud perpetrators must pay indemnity to the government in a civil suit known as a key tam or whistleblower action, where the whistleblower gets to share in the amounts collected by the government. The newsletter also has a listing of other insurance fraud convictions for crimes other than health insurance fraud. And finally, an article on chutzpah, to appeal a conviction where overwhelming evidence established a $31 million fraud. Now, chutzpah is a Yiddish term for unmitigated gall, but it's even more galling in that it has been defined as a request for mercy from a defendant convicted of murdering his parents because he is an orphan. In United States of America versus Patrick Tonji and Serge Frankowitz, the United States Court of Appeal for the 11th Circuit concluded that the defendants asserted a series of spurious claims on appeal that their convictions for running a fraudulent conspiracy and scheme to defraud government-sponsored health insurance programs were just not going to succeed. The defendants' convictions, and thus the appeals, began and end with Atlantic Pharmacy, a pharmaceutical business that manufactured and sold custom medications. Serge Francois opened Atlantic in 2009, owned the business, and was the pharmacist in charge. Atlantic's business operations largely involved non-sterile compounding, specifically the creation of compound prescription creams from scratch using various raw material. Francois hired Patrick Tongi, his former used car dealer and personal trainer, to manage Atlantic's compound prescription cream business. Despite Tongi having no pharmaceutical training, in total, Atlantic collected over $31 million in claims for these creams from TRICARE, the Federal Employees and Military Health Insurance Program, and the Federal Employees Health Benefit Programs, two federal insurance programs. They were eventually convicted on a number of grounds, as some raised by both defendants and some by the court, challenging the convictions because of what they claimed to be prosecutorial misconduct, improper jury instructions, inadequate sufficiency of the evidence. Unfortunately for the defendants, the appellate court understood what had really happened, and perhaps because for years the defendants defrauded the government for amounts exceeding $32 million, they had the funds to appeal their convictions. However, the 11th Circuit saw the appeal to be nothing more than chutzpah, and disposed of the multiple charges of error with alacrity. It is essential that these conspirators who take advantage of innocent people entitled to TRICARE and other benefits to prevent the ability of the defendants to profit from their crime. The conviction was affirmed, and they will hopefully serve their full sentences and make restitution to the government for the amounts of money they stole with their fraudulent creams. In addition, the newsletter discusses free insurance videos that are published by Claim School, new books for the insurance claims professional, a listing of Zalma on insurance blog postings for the last 10 days, why insurance fraud costs everyone, and the book of that title. You can read the full PDF, 22 pages, by clicking on a link at www.zalma.com, which is the link for Zalma's insurance fraud letter. And you can also subscribe by clicking on the link for subscribing to the newsletter. Thank you for your attention.